What a fantastic day on the market. Richemont up 7.5%. I was talking about those prices a little earlier with regards to sales. Strong sales despite the very strong Swiss franc.
Hi Eleni, thanks for having me. Yeah, very good numbers out of Richemont today, beating what the market was looking for. The Swiss watch exports were running at around 24%, and that's really what the market was looking for out of Richemont, but they came in on constant currency terms at about 35% growth for the 5 months, which was very strong, and obviously sent the share up quite strongly. But bear in mind that Richemont was also down about sort of 5-6% yesterday on the Swiss bank intervention news as well.
We know that internationally, in fact, that Richemont has actually been one of the underperforming stocks when it comes to the luxury goods space. We know that China has been a big buyer of its watches in particular. Now that the Swiss franc is going to be controlled in a sense and not going to breach that key 1.2 level against the euro, what kind of impact is that going to have on Richemont sentiment going forward?
Well, I guess you have to take, firstly you need to decide whether in fact the Swiss National Bank will actually be able to hold that peg. We've seen other central banks not being able to sort of hold pegs in recent history. We'll point to the Bank of England. But assuming that they can actually hold it there, that will obviously limit pricing pressure on Richemont. A large amount of their costs are Swiss franc based. So if the Swiss franc doesn't appreciate, that should help them maintain their gross margins.
Let's touch on banks. We've also seen a fantastic increase in the bank share price overall, in fact, today. Nedbank being quite an interesting stock, up 4.6%, and it seems to be one of the favorites with regards to the rest of the banks, purely because it's looking far cheaper. Do you think this is a good time to head into a stock like Nedbank?
It's beginning to sort of pop up on some of our screens as attractive. They had a fairly good set of interim results last month, sort of 6 Rand of HEPS, a market probably looking for anywhere sort of 13 Rand 50 to 14 Rand for the full year. So they would put it on a sort of a P of 10, so not sort of overly expensive. Still looking fairly pricey on sort of price to book, unless obviously the ROEs from Nedbank can start to increase. At the half year they were barely covering their cost of capital, but I think well, at least our view is that there is a good possibility that over the next 2 to 3 years they could get to about a 17.5% ROE. They are one of the few banks that still have a fairly hefty bad debt charge, which we think could unwind in the next 2 to 3 years.
Do you think perhaps that it is slightly risky to be within the financial banking sector, or at least have exposure to this space, given the fact that we still see turmoil for many of the developed market banks in Europe and the US, of course?
Look, I think South African banks weathered the previous crisis significantly better than their peers, and our view is that they probably would also weather a sort of a fallout from Europe significantly better than their peers. All of our banks, with probably the exception of Investec, do not have massive or any exposure actually to peripheral European debt, which is really what is causing the issues in Europe. So they should be considerably better sheltered from that perspective.
Remgrove gaining 3.4%, company out with trading updates as well today. We're seeing very strong movements to the upside. Can these be attributed to the good news out of a lot of these companies, or do you think that it's just moving in sympathy with all the other strong movements to the up or to the downside?
Yeah, look, Remgrove is an investment trust, so it tends to mirror the movement in its NAV, which a large part of it these days is First Rand, RMH, and Mediclinic. So the move up probably reflects that. In terms of the earnings trading update that they put out today, it's quite a lot of noise coming through there. They've moved their year end to June to coincide with that of First Rand, their major investment. And we're now comparing a 15-month period with a 12-month period, so that 50 to 60% that they're guiding is not comparable with last year's numbers.